Now we're going to talk about where does most of the Forex trading in the world actually take place. It's important to understand that this is a global market. The market doesn't close like the stock market closes every day. Instead, the Forex market closes only on the weekend. And what you see happen is the New York market will roll into the London market. The London market will roll into the Asian market, which is Tokyo and Sydney. And then that will roll back. If I could draw my arrow, that will roll back into the New York market the next day. So the way that I teach everyone to understand the Forex market globally is break it down to 3 sessions. Again, dropped out of college, most of you know that. I'm not a mathematician and I still make money trading. So anyone can do this, but let's keep it even simpler than that. How many hours are in a day? 24. How many sessions did I just say that there were? 3, the Asian, the London, and New York. 24 divided by 3, 8. So each session is 8 hours. And you can block that off on your chart, and that's how we can start to identify different trading sessions geographically. So when you're looking, if you want to take notes or screenshot this, you guys also have access to download this and save it, do whatever you want, put it up on your wall. That's what I used to do. Understand that the Asian session is 5 p.m. to 1 a.m. New York time. The London session then takes over at about 1 a.m. New York time till about 9 a.m. And then from 9 a.m. to 5 p.m., that's the New York session. That's our American session, so to speak. And like I said, the market is only closed on weekends. Friday evening to Sunday evening, there is no trading. The market will stop moving. Crypto, of course, is moving 24/7. The stock market is only moving from, of course, there's pre-market and post-market, but for the regular market, it's only from 9:30 to 4. So it's even smaller than the Forex market. And over that entire week, we can see multiple trade setups happening while you're asleep, while you're awake, when you're busy with the kids. That's one of the things that actually attracted me to the Forex market when I was looking to get into day trading. I knew I wanted to be a trader, but I didn't know I was going to end up being a Forex trader. I thought I was going to end up trading stocks. But the Forex market is so much more appealing, in my opinion, hence me doing this course and trying to teach people about it. Clearly, I believe that. So it just sold me, and I think it's going to sell you too. Now, back to my central bank survey. Here is another screenshot from them. And it says, in April of 2019, sales desks in 5 countries, which is the UK, that's 1, United States, 2, Hong Kong, surprisingly, 3, Singapore, 4, and Japan, 5. Those 5 countries facilitated 79% of all the foreign exchange transaction activity in the entire world. So when you think about big global financial hubs, you should think London, you should think New York, Hong Kong, Singapore, and Japan. Those are the 5 countries that are doing most of the trading. What does that mean for you as a guy out in Kentucky, or as a guy in California, or a girl in Georgia looking to trade from home? What that means is just understand those market centers are going to drive majority of the price action. Remember what I said earlier in the course, we're little fish in the big pond. There's bigger fish out there. We're going to talk about them here in a second. That's these banks. These are the banks that in June of 2019 controlled majority of the foreign exchange volume. You have JP Morgan at the top at almost 10%. Then you have Deutsche Bank, then Citibank, XTX Markets, UBS, State Street, which everybody knows is big, HC Tech, HSBC is in there, Merrill Lynch is in there, and Goldman Sachs is there. Those are the banks that are facilitating majority of the currency exchange transactions. So when you think, why do I need to know that there's most of the trading done in New York and London? As we get later into the content and I start to get you more into the active trading information, we'll say, hey, if it's a bank holiday, for example, and all these banks here, they're all closed. No one's trading there. Or, let me finish that example. If the banks are all closed, that would lead us to think that the charts are going to act a little bit differently versus if they were open and there were traders at the desks in these banks in those 5 locations all over the world. Another example that I was going to say is, what if you have just a US bank holiday, but the Japanese banks are open and the UK banks are open? Well, volume could be decreased, but remember, the US dollar is 88% of all currency transactions. We're going to talk more about Forex news later, but just understand the US dollar, our bank holidays, if our banks are closed, the whole market will look different. Versus if it's just a Japanese bank holiday, only because the majority of the trading is not done through the yen, it doesn't impact the overall market as much. So understanding when banks are closed, where they're located, and when they're open, those are 3 important things to understand as you look to make trades every day. Because you could find a great trade setup once you learn how to do that, but if the banks are closed, your trade might not move. It might chop sideways, and no one wants to get stuck in sideways trades. That's not why you're here. So understand it kind of works like a hierarchy. You have those big banks, the commercial and investment banks that I just showed you, they're at the top. With them, parallel to them, is the central banks. We have the ECB, the Fed, you know what they are, the Japanese central bank, all these central banks all over the world, they actually participate in foreign exchange transactions as well. They not only will exchange within their own country, but they'll do it with other central banks as well. So you'll go ECB to Fed, that will happen, but you'll also have the ECB doing things with its smaller regional banks and smaller hedge funds underneath them to facilitate foreign exchange transactions. Now, the reason I showed it as a hierarchy, these are the two people here at the top. They are dictating the price of this currency exchange. Remember that 127 yen I showed you? That price comes from these guys. They're the ones that are the big sharks in my example of the big ocean, okay? Beneath them, the hedge funds, of course, they're gonna get the second best price. Then Volkswagen and all those companies, they're also gonna get a good price. And then underneath them, it's you and me, the retail traders. Now, you would say, Austin, why do we want to trade in a market where we're at the bottom? Remember my example about the ocean? This is another great example. That little dot right there, you can't even see it. That's Mercury. This is the sun. We are Mercury. Those brokers and all those institutions and hedge funds and companies, they make up the rest of the Forex market. So we're able to come in and make, in some cases, millions of dollars without even, basically, you could think of it as them noticing. You know what I mean? Because they're doing transactions on tens of millions, hundreds of millions, and even billions of dollars. Look at what's going on right now with the Fed and the reverse repo market. So we are able to come into this large financial market and not even make a wave and still be able to make money. That's the gist of what I wanted you to get here. Now, I want to move into how we can compare Forex to the stock market, because I know a lot of you guys are stock traders or have traded stocks before, or at least you know somebody that has, but you probably are the first person of your friend group or the first person in your family to start talking about Forex trading, just because I know it's not as popular. So let's compare the two just to give you more context on the power of the Forex market, in my opinion, over the power of the stock market.